Hey everybody, Real Estate Ninja here. I hope you're doing great. Got a story about Jamie Dimon, one of the smartest bankers on earth. Why? Because he runs one of the largest banks on earth. He has access to data that most people or even some governments have zero access to. All right? And when he does something, you need to pay attention. We've talked about Jeff Bezos. We've talked about Warren Buffett. We've talked about wealthy individuals that are making moves. When everybody else is over here looking at the price of the stock market, they're doing something completely different, and it's very important to know that. Stories out of Reuters just came in last night. JP Morgan CEO Jamie Dimon sells about 150 million of his shares, an SEC filing says. It says here, Jamie Dimon has sold about 150 million of his shares in the bank, an SEC filing showed on Thursday, marking the first time the head of the largest U.S. lender has sold shares since taking charge in 2005. Dimon and his family intended to sell 1 million of their 8.6 million shares, the bank has said in a filing last October. Dimon, one of the longest serving chief executives on Wall Street, has sold off 821,000 shares of the bank so far. The bank has a market capitalization of more than 527 billion, according to LSEG data. So he's selling it in tranches, right? As to not spook investors, to not spook Wall Street. But you have to see what's happening, the trend. Why would Jamie Dimon decide to sell 1 million shares if he thought that the banks were going to keep crushing it? I want you to think about this. Now, here's another thing. A lot of people would say, well, yeah, Ninja, he's got 8 million shares. He's only selling off 1 million. You got to live sometime, right? You're absolutely right. But just so you know, most people don't understand this. A lot of wealthy people actually go and borrow against the value of their shares. Sure, they pay an interest rate, but they keep the shares because they know where it's going to go. They don't outright sell them, right? You also have more voting power, all these things. And so you say, okay, that's not that much. This is what I want to tell you. A wealthy person knows this. A poor person does not know this. This is the biggest lesson I think a lot of people can get today. During a correction phase, whether it be a recession phase in an economy or a depression, everybody loses. Every asset class goes down at first, and then some take off like a moon shot, like gold and things like that. But you have to understand, as everyone's losing, it's about the opportunities that you grab with the money you have left. It's all about losing less than everyone else and then taking that less and not looking like the glass is half empty. You go and take that money and you go and put it to work and you buy assets for pennies on the dollar. If you understand this, let me know down below. Now, it says here, the sale is not related to leadership succession, and the bank chief has or had no current plans to sell more stock, but could consider doing so in the future, a company spokesperson said in October. So there's a big difference between what is said and what is intended. And we're going to keep staying on this story because once he sells over 1 million, I'll be able to say, oh, look, just like Jeff Bezos, he was only going to sell this much. Now he's already completed that and he's doing more. You'll see it. It's done in tranches because most people forget what happened merely a few months ago, let alone a few years ago. All right. Matter of fact, I saw a post on Facebook that says, just in case most people have forgotten, we never want to forget this. And it had the date of 2020 and a gas station sign that had gasoline back in the Mideast, or, you know, on the east near the, you know what I'm talking about, where gas is cheaper, at $1.86 a gallon. And it's definitely not that now. It's up near $3. And it's a good point because most people, they just get used to the situation they're in. They become like animals, domesticated, and they just get used to it. And they don't go, no, you remember when we had more freedom back then when things cost less? So when you see these CEOs, these billionaires selling their stock while everyone else is running. And remember this, please understand this. For every stock that sells, the goal of a C-suite exec, and I know this from experience, is to provide liquidity, and so that you sell into strength, not sell into weakness. Because if you sell into weakness, the share price goes down. So you need to find people to sell your shares to. That's why they do them in tranches. I have actually been in positions where assets that I'm selling are so large to where it would overtake the market. So I had to slow my roll and sell it into strength rather than weakness, causing a panic. Technical analysis, TA traders will call this buy walls, sell walls. There's all kinds of different ways, crypto, we call it whales trading. It's important to understand this. That's why they're doing this, and that's why their spokesperson left it open. He can do this again in the future, meaning it's not going to be limited to just 1 million shares. The only question is he going to be able to do it before the bank stocks really start to turn down, because at that point, Diamond can't sell. Now think about that. Right now, banks are doing good. Everything's cruising up. Everything's good. Everything's good. He's got only so much time to liquidate so much shares. He can't announce too big of a sale. It'll cause the stock to go down. He can't sell these tranches close enough. It'll cause the stock to go down. If all of a sudden the market turns, and like we just saw another bank biting the dust, right? New York Community Bank. I'm blanking if I got the right name. My point being is that if it starts, the banking sector, bank stocks start to trend down, he sells into that, that's going to cause panic. He only has so much time. So there's a lot of things to consider when you're selling off your shares when you're running a company. Jamie Dimon knows this better than anyone. By the way, hi Jamie, how you doing? How you doing? JP Morgan reported its biggest ever annual profit last year. It also acquired failed regional lender First Republic Bank in May, which has helped to bolster profit. I want to share. So you've got them bragging about how it bolstered profit because, quite frankly, JP Morgan Chase got the cream of the crop. You see, when the Federal Reserve's dealing with banks that are failing, they take the assets and they go to their buddies and say, oh, hey, the bank's failing, but this book of business right here, you're going to want this. Like Jamie Dimon goes, yeah, I want all the deposits. The deposits are the most valuable thing to me right now, unless we're talking an asset fire sale. So they take the deposits, and that's what helps, right? Because the more depositors, the more people that have money in their bank, they can go and leverage that money 9 times, right? So they're bragging about that. At the same time, was it New York Community Bank or whatever one that is that's going under right now? It's because they bought the wrong assets from First Republic. I believe it was First Republic. Again, I'm live. I'm not as fancy as all those people that are, out there crushing, look like they're rocket scientists because they spend, an hour reading notes than doing this. Trust me, I know. So you see, as one bank is bragging that it bought assets from a failed bank, it's because they bought the right assets. They took the right assets, actually, the depositors. The other banks are failing because they got the wrong ones, the commercial mortgage or the commercial real estate, and actually what they did, like in New York's case, it brought their the bank size over $1 billion, which brought them into a whole new level of regulations, which put more eyeballs on their stuff, and then it was too hard to hide it. You see, these regional banks are collapsing right now, and it's not in the media because they have a totally different threshold of rules. And the Fed has made it very clear. We are not going to disclose the banks that we are bailing out, because that is what the repurchase window is. When all that money goes into it and it's added to the liquidity pool, it's a bailout, stealth QE. We're not going to tell you, and not only are we not going to tell you which banks, because we're afraid you're going to go pull your deposits, we're not going to tell you for up to 5 years after this crisis is done, meaning up to 5 years after the repo window closes. We are in the craziest time ever. Now, let me tell you this. I bank at tons of banks. Chase is one of them. Chase is the largest bank in the US. The likeliness, in my opinion, of it going under, very low, because banks have become too big to fail. But I'm going to tell you what, I don't have just one bank account. I've got lots of bank accounts. I keep them under the thresholds for the FDIC limits for insurance. I also don't even plan on that. I have multiple banking institutions that I work with, because I don't, there's a lot of people that say, you're crazy, keep your money in the bank. Well, you know what? Some of us have enough to where we go, it's too much to put under the mattress. And commerce has to keep going. I can't just, go and invest in a company in Canada by going, hold on, let me go check under my mattress and get my dollars. It just doesn't work that way. But successful people understand what I'm talking about. And that's the thing. My goal is to make people successful. How do you make them successful? You see the trends. Jamie Dimon is selling stock. He's not selling stock because he thinks the stock's going through the roof. That's just it. And if you think for a second, no, he just wants to sell some so he can go on a vacation. Don't worry. He's rich enough. He can go on whatever vacation he wants without selling the stock. We need to start thinking like billionaires. When you start thinking like a billionaire, you'll start making millions. I'm not joking. That's how it works. You want to become a millionaire? Think like a billionaire. Because millionaires are now a dime a dozen these days. It used to be a big word. But because of assets going up in value due to extreme inflation, it's making the wealthy people are getting fewer and fewer, even though there's more millionaires coming out there. I know lots of paper millionaires that are dirt broke that don't own their own car. They're millionaire on paper. They're this close, just like this close to losing everything and gone. I saw it twice before, the dot-com bust. I was an investor in dot-com stocks starting in 1997, 1998. Got out right before that boom of that bust, and I got out right before the real estate. I got burned in a couple of big investments during dot-com, and I got burned on one property left in 08. But I sold like 14 or 13 others. So I know what it's like, even to see it before, ahead of time, try and do something about it and still get your tail singed as you're trying to run out of the building that's on fire. This time, there ain't no hair is going to even smell warm. This is going to be an exciting time. I hope you're ready for it. Didn't mention last day for the side hustle course at $199. If you're interested in starting a business or a side hustle, I think it's a great value, quite frankly. You can learn from my well over 30 years experience now doing side businesses and hustles and making money. You can learn from all my mistakes and all my success. It's $199. That's the last day. It goes up to normal price tomorrow. Hope you guys have a great day. The Real Estate Ninja is out. How do you turn this thing off? Jesus. Gotta love